So welcome back to the fourth and final part in our tax series with Myna. We've talked in part one about why, we've talked in part two about, kind of what are the taxable events. Point three, more complicated scenarios such as DeFi and what you need to do. And today we wanted to just talk about the kind of how you can start off really, how you can start tracking and how you can start putting the groundwork down. So we've got Joe with us again. So welcome, Joe.
Hi again, Ash. Good to see you again.
Good to see you. Well, in terms of, in the background, we've talked about all those various things. Say I'm sat here now and I'm like, okay, I want to start sort of tracking this. Now, we both work with, a software solution called Accounting, and we've actually, you've been helping me use this to actually build my, my sort of tax model so I can go forward on this. Can you explain a little bit about what Accounting does and how it could be helpful for people with, I guess, perhaps the more simple and intermediate crypto tax side of things?
Yeah, so Accounting is a tax tracking tool which will basically bring in all your wallets and exchanges and all the transactions around those and help you kind of pull the pieces together to come up with a tax report at the end of it. But the other key thing I think really interesting about Accounting, which I think sets it apart from some of its competition, is it's not just that. It also then gives you a really nice portfolio tracking tool around gains and losses, where you've made them, where your current balance is, where your portfolio has moved over time, making it much easier to see those peaks and troughs, which we all get, unfortunately, in the crypto space. So I think it's more than just a tax planning tool. It's a crypto portfolio tool which also helps you plan your taxes. So yeah, we're really big fans of it.
Yeah, I mean, so my starting point was to set it up, and for example, I had had a wallet with my details in, which we imported in. I also had been trading on Binance, Coinbase, KuCoin. You set up APIs, it pulled all the information in. Now, there was a little bit of kind of working out. Sometimes there's things that it can't quite work out. But if you had a very clean system where you'd bought a load of Bitcoin on Coinbase and done a bunch of trading on other ones, it just pulls it all together, provides you with a portfolio, and essentially then allows you to export a tax report. They also do, you can sign up for free. We'll put a code down below. You can sign up for free and import all this stuff. And then if you want to do tax reporting, it's a very modest cost to do it. And I found it incredibly helpful. It took a lot of the stress away, because a lot of the time you're sitting there thinking, Christ, I've got all these different exchanges. How the hell am I going to join all this together? It does a lot of the heavy lifting. Now, in my case, even with Accounting, which is incredibly helpful, there was still, the need to engage help from yourself in order to sort of put that together. So you're able to work in conjunction with that, and perhaps somebody who's got a slightly more complicated crypto tax, aren't you, to come up with a solution?
Yeah, so again, without doing a cheeky sales plug here, I think that's where the difference between ourselves and your typical kind of tax accountant looking at crypto will be, is that we actually love and are hugely, invested, not hugely financially invested, but personally, mentally, etc. I really love the space, and so actually I understand a lot of the nuances and where things go. So what I can then do is be able to help you put not just the transactional stuff, because I don't know every single transactional thing that happens in crypto, I don't think anyone does, but also put the tax spin on that as well. So what we can do together then is make sure that portfolio is squeaky clean from all aspects. And I think that's the key, is that we will work with you and with Accounting to make your portfolio as efficient tax-wise, but also as accurate as we can for you to use that going forward to make decisions and whatnot. So yeah, I think, like I say, that's the difference here, is that we want to help you make your portfolio perfect rather than just report what it says from a tax perspective.
And also, you mentioned there about sort of accountants. Obviously, you work with traditional accountants too. So I have an accountant who's more of a media accountant, been with him for 20 years. Obviously, crypto wasn't their specialty, but you have been working in conjunction with them to help dovetail in my crypto taxes to them, which has worked really well. So you're actually quite cooperative with traditional accountants too.
Yeah, of course, and ultimately we want to support people. We want to support the crypto community to be able to understand where their tax liabilities may or may not be and plan ahead for that. Right, that's our ultimate goal as a business. So why would we not then work with other accountants to ensure that happens? Because the last thing we want is for someone to not use us because the accountant's concerned that we might take the work, and then ultimately pay more tax than they need to, or not pay enough and then get in trouble later on down the line. So we just take a hugely collaborative approach, and we just want to help, like I say, the crypto community. And if that means collaborating with other accountants, we're absolutely more than happy to do that.
Yeah, that's from our perspective also, like I've said a few times here, this isn't sponsored content. This is content we want to produce because I desperately want people who, especially people who've made some gains this year, the market's going into a bear cycle as far as I can see it at the moment, and people who've made these gains earlier in the year, if they don't, if it goes into a bear, they lose their portfolio and they don't tax manage, they're going to end up with a tax bill that they weren't expecting for funds they no longer have.
Mm-hmm. Yeah, and that we've had that conversation multiple times. With people where they've crystallized gains in last year, and there's nothing they can do about that now. Those gains have been crystallized, and one of the really interesting factors is we're having all these conversations that the majority of the conversations we've had around this space have been past 5th of April. For some reason, there was this trigger in people's head that, oh dear, we've now got a potential tax bill that we need to resolve. So what we're working with people is to say, okay, last year is last year. We'll mitigate as much as we can. We'll help you as much as we can on that side of it. But let's make sure we don't make that mistake again. So if we are going into a bear cycle, like you just said, we need to make sure that we are in the right position tax-wise so that we've got enough cash lying around to be able to do that. But also making sure that we're in the position to take advantage of the next bull run so that we, again, aren't wasting money on tax where we could actually be much more forward thinking and planning ahead. So we're kind of taking that double-edged approach. Let's get rid of last year. Let's make it as good as we possibly can. And then let's make sure that that doesn't happen again and that we're as efficient as we can be going forward.
Or there's going to be a lot of second-hand Lambos for sale, basically.
Certainly is. Maybe you and I can pick one up, Ash.
Now, just to sort of finish up, really. So one thing I wanted, from my perspective, we've tried very hard to basically put our crypto into the best position tax-wise we can. Clearly, it's not simple, and clearly it's not an easy thing to do. A lot of the stuff that's happened in DeFi, we've tried to do the best we can. Do you think HMRC will sort of look upon people who have made every best effort, even if it isn't perfect, and said, look, we're really trying here? Do you think there'll be a case of the people who've done that will be sort of looked upon as like, okay, we can see you've really tried here to do this? Is it going to put you in a good position as opposed to just simply, ostriching it?
Yeah, I mean, of course, those who ultimately what a HMRC want to do, they want to collect as much tax as they possibly can, and they want to penalise those that don't bother. If you are making an effort, which everyone probably listening to this will be making an effort by even just the fact of they're listening to this, that you're always going to be looked upon more favourably than those that are just completely ignoring it, deliberately hiding it, etc., etc. The way I'm looking at it is that there are certain areas. We talked about DeFi in the last episode. We didn't get a chance to touch on NFTs, but they're another one where there's no real guidance. So again, let's just treat these as best we can. Let's document what we did and why we did it. Hence, using things like a CoinTing, because we can keep a detailed record of why we transacted things in a certain way. And ultimately, if anyone wants to then come and ask you any questions, you can literally just say, here's my documentation. These are the reasons I did what I did. There it all is. If you've got a problem with it, that's fine. But that is completely upfront and honest. Here it is. So if you've got a problem, it's something that we weren't aware of, but we've done our best. And you'll always be looked upon favourably. So again, it comes back. I think I've been saying this every single episode, but it comes back to that planning. Thinking ahead, planning. What might they ask? What might they not ask? And how can I make sure that I've got every duck in the right row, basically?
Yeah, I think that's just the news here, isn't it? It's just because a lot of people also don't realise that if they, for example, move some money to Coinbase and take £10,000 out, that's going to trigger an alert, right, at HMRC. I'm sure any KYC'd exchanges of transactions over a certain amount, that's going to get triggered. And then if your tax return goes in and there's no mention of any crypto gains whatsoever, there's going to be a sort of, hang on a minute, surely you've had all this stuff through Coinbase. I presume that's how it works.
Yeah, exactly. Yeah. Again, I don't think that HMRC have got a big red button in their office that as soon as someone, transacts on Coinbase, they press that big red button and everyone runs around like a lunatic and tries to find out who they are. But you are correct. Ultimately, Coinbase are a centralized IPO'd exchange who will have obligations, not just to the American authorities, but to authorities around the world that, as part of their IPO to provide information at the request of HMRC. So, without that sounding really boring and whatnot, that is a fact. So again, it comes back to that point of just being ready to deal with that. And that's not in a, they're not necessarily going to look at you in a bad way. They're not necessarily going to try and attack you. But if you're ready for them, it doesn't matter how they come at you because you're ready for them. So yeah, I think plan ahead, think about everything you're doing, engage with someone that can help you. It doesn't have to be us, just engage with someone that can help you, and just do the best you possibly can to minimize those gains, to minimize that tax bill, and to maximize the profit you make on your crypto.
Great. Well, really appreciate you coming on and doing this content. Obviously, we'll have the details down below for Joe's company and also for Cointing. And also, you can reach out to us. You can reach out to Joe. We're very approachable, desperately trying to help everybody here. Keep these gains and don't get yourself into a position where you end up in trouble. So, Joe, thank you so much. And I'm sure we'll catch up in the future.
Yeah, thanks, Ash. Great to have been part of this.